on Business Incorporated today. Uganda government assures citizens of 10-day supply of fuel, bearing disruptions from Kenya election. Egypt begins energy rationing on Thursday. And we'll take a look at Africa Innovation Impact Reports and preparing the continent for the future. Good afternoon. Welcome to Business Incorporated here on Channels Television. I'm Ini John Mekwa. Let's start off as usual with major markets in Africa, starting with Nigeria. The NGX has sustained that negative sentiment. It's been keeping up for days now, as at intraday the offshore index was slightly down 0.02%. This is better than yesterday, though. We do hope it sustains that. South Africa is also notably down more than 1%. In Egypt, EJX 30 on the other hand was trading positive at intraday, and then we see Kenya closed Tuesday's trading 0.4% down. Moving to the Middle East now, investors displayed more positive sentiment as all of the major markets we track were trading in the green at intraday. Abu Dhabi was trading up 0.44%. Dubai was also slightly up 0.11%, while Saudi Arabia was 0.65% in the green, with Qatari index up 0.37%. Let's leave the markets and go to Berlin now, where EU's ban on Russian gold begins today. It's the first major embargo on Russian energy by the EU, which will follow with a stop of oil imports by year's end, and later it will also have gas. We have Stephen joining us from Berlin now to tell us some of the impact that is expected. Hi, Stephen. Good afternoon. How consequential is this embargo that begins today?
Well, Brussels estimates that this will cost Russia 8 billion euros in revenue annually. That sounds like a lot, but when you compare it to revenues from oil, for example, it pales in comparison. The EU paying close to 100 billion euros to Russia for oil imports just in the period from March to July of this year. So that gives you a sense that coal really isn't the real revenue bringer. Now, that said, this is an important step for the EU. It's the first time they've banned Russian energy, and it also marks a sign of solidarity from 27 nations that have very different priorities and very different energy policies. Now, the next steps will be more difficult. The EU plans to embargo crude oil imports from Russia by year's end, and then by the beginning of next year, oil products. And then sometime in the future, probably in years to come, it will hopefully take away all natural gas imports from Russia. That, of course, a much more difficult step.
Yeah, but Stephen, can the EU really replace Russian energy?
Yeah, that's the million-dollar question, and that's what European governments are rushing to do right now. If we look at coal, that's much easier to replace. There are plenty of other suppliers out there. Oil is a bit trickier. Much of the infrastructure that delivers oil to the refineries across the EU, a big portion of that is controlled by Russia. Some of the refineries themselves are majority owned and controlled by Russian state firms. When you look at Germany, for example, so replacing some of that infrastructure or getting around it will be difficult. There's also the issue of the grade of the oil. Russian-grade oil in particular lends itself to processing for diesel, to processing for fuel oils. So you'll have to look at what grade you're purchasing to replace that. Natural gas is the biggest problem of all. Replacing Russian gas imports means relying heavily on liquefied natural gas, but there is a high demand for that around the world, and also for shipping of LNG. There are special ships that are required to ship it. Both of these things will drive the price up, and that's something we expect to see in general with all of these commodities, is that the trend is that prices will remain high as a great deal of inventory is taken off the market because of these EU bans on Russian fossil fuels.
So let's look at the markets now. What can we expect from European markets today?
Well, European markets today mirroring what they've seen from Asia overnight, and that is that they've fallen, and that is based on fears over the new inflation readings that are coming out, that were set to come out in the U.S. Later on Wednesday. Now, analysts had expected that those readings, the inflation rate would actually fall a little bit as oil prices have fallen, but many investors not sure, and they know that if there is a higher than expected reading for inflation, that would mean a more hawkish response from central bankers in the U.S., which would then ripple out into the global economy, eating into business profits. So that's what they're looking at right now. In general, markets have been a bit anxious. Earnings season has gone better than expected so far for European markets, but there are still anxieties due to the war in Ukraine, and then, of course, the recent tensions between the U.S. and China.
All right, Stephen, thank you so much. We'll certainly be looking for the reaction to that U.S. inflation. All right, so let's move over to the UK now. This morning, Laddie had a conversation with Juliana from our UK studio, and it was all about the energy price. Once again, we are here discussing energy price on Business Incorporated. Hi, Juliana. Good afternoon. I guess one of the questions we should be talking about now is how are you, or what will be the right way to prepare for blackouts in this emergency plan for January?
Good afternoon, Innie. I've got to say, I think one thing the British media do well is scaremonger. So I think it's really important to kind of reiterate the message and the statement that was put out by the Department for Business, Energy and Strategy this morning, is that calm down, there won't be any blackouts in the UK. However, as what you would expect from a good government is to prepare for worst case scenarios. But worst case scenario really is the worst case scenario, which could potentially be a blackout here in the UK, though we do have to be careful for vulnerable viewers that wouldn't happen. But of course, we are going through really difficult times here in the UK at the moment. You know, of course, this is all triggered by the war in Ukraine, which has quadrupled energy bills. They're currently standing at about £1,200 a year, likely to go to about £3,000 and then over £4,000 in January. Now that is causing severe issues on one side. Then we got that shock announcement from Norway yesterday. Norway considered kind of the battery of Europe through their hydroelectronic plants. They're able to supply many countries, including Britain, through the North Sea, electricity exports. Now, they said that they are going to have to reduce doing that because of extreme weather, which is another issue that's causing severe issues in Europe, particularly in the UK. Some fires have already sparked this week, but because they haven't seen rain, the reservoirs that they use to power these hydroelectronic plants are not doing it as fast as they could, which could lead to a reduction in exports. So a lot of headlines have been taken from that, and you know, people are saying, you know, we're going to have some extreme blackouts, which isn't going to happen, but the government have been preparing for worst case scenarios. But I think it's really important to reiterate that that is extremely unlikely, but it just does go to show just how many different issues we are grappling with here at a time when we only have a caretaker Prime Minister, Boris Johnson, who's away on holiday at the moment. It doesn't feel like we have a functioning government. However, as you were saying, I was discussing with Laddie this morning that tomorrow there will be a meeting, a crisis meeting between Nadhim Zahawi, the Chancellor of the Exchequer, and Kwasi Kwarteng, the Business Secretary, along with some of these big gas and energy CEOs, to try and look at ways that they can tackle this looming crisis of energy bills. That meeting will take place tomorrow, although I did read that unfortunately no new legislation concerning handing out money will be made under this current administration until we see a new Prime Minister, which won't be until the 5th of September.
Yeah, well, a whole lot to digest there, but it's good to know that the blackout is only in an extreme situation, and we do hope it doesn't get to that, Juliana. Well, let's look at the market. How's the market looking?
Not bad at intraday, although I've got to tell you that the sterling is unfortunately the worst performing G10 currency this year. There's been a myriad of different issues that keeps the pound from sinking low. And then, of course, you get those pretty scandalous media headlines. The FTSE All Share is up 0.3%, 0.13%. The FTSE 100 is up too by 0.09%. And the FTSE 250, that domestic market, is up by 0.28%. In the currencies market, the British pound currently trading up against the US dollar by 0.23%, though down against the euro by 0.10% and up against the Japanese yen at intraday by 0.08%. Innie.
All right, Juliana, thank you so much for that update. Enjoy the rest of your day.
Thank you.
Well, let's move on to other markets now. Asia Pacific shares fell as investors digest inflation data from China and look ahead to the US CPI report. Hong Kong's Hang Seng Index fell 1.96% to close at 19,610.84, with a Hang Seng Tech Index down 2.83%. Heavyweight Merchant and JD.com fell 3.64% and 4.6%. respectively. Mainland China's slipped, and with the Shanghai Composite 0.54% lower at 3,230. China's Producer Price Index for July rose, and consumer prices increased 2.7% in July compared with the same period in 2021. The Nikkei 225 in Japan fell 0.65% to close at 27,819, while the Topix index slipped 0.17%. In South Korea, we see there that the Kospi dipped 0.9%. That's the Kospi there. It's the dip 0.9% at 820. And then the MCSI Broadex Index for India, Asia Pacific shares outside Japan shed there. Those are the numbers for the Asian market. Let's move to the United States now. Stock futures were slightly higher today on, as investors looked ahead to that inflation report that we're still waiting there. You see the numbers there. The Dow Jones was up 0.18% at 32,795. S&P 0.17%. The Nasdaq 0.16% at 13,052.25. Well, the moves come after S&P 500 and Nasdaq fell for a third straight day. On Tuesday, the Nasdaq Composite led the declines, falling 1.2% after Micron, Novavax, and Upstart warned that future earnings and revenue may come in lower than previously thought. The S&P 500 fell 0.42%, and the Dow Industrial Average shed 0.18%. Investors are awaiting the latest Consumer Price Index report, which could confirm or dash hopes that rising prices have started to slow. Economists expect that the report will show inflation has cooled slightly, led by slipping oil prices. The Federal Reserve will weigh the report along with other key economic data ahead of its September meeting, where it's slated to hike interest rates again. Earnings season also continues, with Disney's quarterly results due at the close of the bell today. Let's take a break now. When we come back from that break, of course, we do have more stories for you, especially from the African continent. Do stay with us. This is Business Incorporated on Channels Television. Welcome back. You're still watching Business Incorporated here on Channels Television. Next, we're looking at the Africa Innovation Impact Report and working with about 4,500 Africans from Nigeria, Ghana, and Kenya. The Africa Innovation Impact Report seeks to unravel the impacts of recent technology innovations and development on various aspects of their lives. So one of those involved in that, carrying out that report, is Olugbemini Idowu, founder and managing director of Talking Drums Communications. He joins us from the UK. Hi, Olugbemini. Good to have you on the show.
Oh, good afternoon. Thank you for having me.
Awesome. So give us some of the highlights of your findings in carrying out this report.
Yeah, thank you. So like you said, our aim with the report was to really capture the impact of the innovation stories. You've all probably seen, most of you would have seen the stories about the multi-million-dollar fundraisers and the expansions and the acquisitions and all those stories. But what we really wanted to do was to capture the impact of these innovations and the stories around them on lives and livelihoods across the continent, which is why we work with Survey 54, a company based out of Ghana, to survey those guys. And what we really found was that these innovations are not just changing how people live and how they work, but these innovations are changing how people think, how people view themselves as Africans, and also it's also driving the need for more innovation across the continent. So one thing we'll point to is one of the first questions we asked was, have these innovations impacted you in any way? And about 85% of respondents answered yes. About 91% said they would use technology that was made in Africa, and another 91% said they view themselves as innovators and entrepreneurs. And we all know that this hasn't always been the case, and I think that is very much welcome. It's very important to understand that where we find ourselves on the continent at the moment, innovation will play a huge role in any kind of future that we have. So the fact that we have this innovation is coming out, more Africans are open to innovation, more innovations, more investments coming to the market, it bodes very well for the future. And the other thing to mention about some of our findings, so we asked our respondents which sectors they thought was most impacted by technology innovation. And surprisingly, education came in at #1. And the reason why I say surprisingly is because, again, anyone that's been following the space will know that the fintechs have been grabbing the headlines and they were getting all the money and all the funding. But about 20%-ish, like 21% of respondents said education had been most impacted. To be honest, I'm still trying to understand what the thinking behind that, but that's what the data said. And we're just going to report the data. Yeah. But even beyond that, the final thing I'll mention in terms of the data is that we asked them where they would like to see more innovation. And healthcare came in at #1, about 35% of the people we spoke to, which kind of makes sense given what we've lived through in the last few years. People want to see more to be done in terms of healthcare distribution across the continent. So 35% kind of makes sense on that front. And then after that was education again, which again makes sense because we know how Nigerian people across Africa, how we value education. It's a big part of what we do. And after that came agriculture, which is again a big part. So it's good to see that it's not just audio innovation in a way. These innovations are impacting the way people work, making it easy for people to trade, but also impacting the way people think and creating like what I hope will be a new wave of innovation that will power the continent forward.
Yeah, well, interesting, as you noted there, the fact that education just keeps coming up. But I guess that's because a lot of people are taking part in virtual learning now, which wasn't very popular. Exactly. It wasn't very popular before all of this. But does it tell us if Africa has stopped playing the catch-up game? I mean, are we going to just keep playing that catch-up game, or can we be at the fore for once?
That's a very interesting question. And I think there are two things I will say about it. On one hand, I think in some ways, I think we can actually make a very strong argument that Africa has leapfrogged the world on many issues. If we look at how we use mobile, for example, we all heard of what's happening in Kenya with mobile money. That is miles ahead of anything that's happening anywhere else in the world. If you look at how people in Nigeria use Instagram and Facebook for commerce to buy and sell, again, that is miles ahead of anything that's happening anywhere else in the world. And it kind of leads to the thing about this new innovation wave that's sweeping the continent. Africans are developing solutions for African problems. And only when Africans start developing solutions to African problems, I believe anyway, that's when we'll start seeing solutions for the challenges that we face. And I think the second thing to mention is there's a saying, I love this saying, the saying by Albert Einstein that says, if you judge a fish by its ability to climb a tree, it will live its whole life thinking it's stupid. And the reason why I love that statement, especially in the African context, is that for so long, the way we measure African development and African progress has always been in the context of what's happening in other places. And I believe that hasn't really served us that well. I think whatever development that's going to happen has to be in the context, and that it has to be based on the reality of what's happening on the continent right now. An example will be, we have to be able to carry along the neighborhood retailer, Mommy Grace that sells stuff down the road, or Auntie Tayo that has a tailor around the corner, or the smallholder farmer that has a small plot, or the chemist that sells medicines. We have to make sure that our innovation reaches out to those guys. Because when we make life easier for those guys, when we impact those guys, then that impact kind of spreads across the board, and that's when we see real progress. Because and again, that will be, for me, that's African innovation, that's African development, not just copying and pasting stuff that's happened in another part of the world that may or may not work for us. Because I don't think at this time, I don't think we can afford to be taking those kind of gambles anymore. We need solutions that work and that can work right now.
True word, especially when we look at the fact that a lot of African countries have been termed emerging markets. But are we really ready? Because emerging markets is going to be, in the next couple of years, they're going to be leading when it comes to production and the power of consumption, purchasing power. But we have to be prepared for it if we want to hold such a position.
Yes, absolutely. I agree with you 100%. I think, which is why I'm quite excited. I'm quite bullish. I'm quite optimistic about what the future holds for Africa. Because I believe as we address the issues that have hindered our growth, so in terms of ability to trade, enabling better financial services, as the report says, better healthcare, better education, better service in the agricultural sector. What we're doing is we're laying the foundation for future growth. And the other thing to actually mention is, if we observe some of the other countries across the world that we like to compare ourselves, that we like to look up to, the Americas, the UKs, a lot of these countries at some point not too long ago, they were in a similar place to where we are right now on the continent. And innovation played a huge part in their transition into where they are and to the success they're achieving today. So for me, I feel like that's why it's really important for us to tell the story. So this conversation that we're having now, and another conversation that happened in other parts of the media about this innovation narrative, is really important that we put it out there, because what we are seeing and what we think will continue to happen is we'll continue to catalyze the growth of these companies, because then more people will be aware of them. If I run a business, I want to partner with an African technology company that's running that business. Or for myself, if I'm interested in developing technology, I can see myself in a founder of another startup, and that can then sort of snowball the development that we want to see, and I believe very strongly in a very short space of time we'll begin to see even more development and more progress on the continent.
All right, so Olugbemini, thank you so much for your time, and now we wish you the best. Of course, we do hope Africa will stay that far, and then at least we'll be proud to be Africans.
Yes. Thank you very much.
All right, so let's move on now, just before we run out of time. And we're going to Uganda, where as the computing of general election results in Kenya goes on, Ugandan officials have said that they have put up measures to ensure steady supply of petroleum products to their citizens. Shortage of petroleum products in Uganda, whose prices are already at record high, has been the biggest fear of Ugandans whenever Kenyans go to the polls. And in 2007 general election in Kenya, Uganda's key trade routes to the sea was blocked because of electoral violence. And to Egypt now, but still talking about energy, the country there has revealed a plan to reduce and rationalize energy and water consumption nationwide amidst a global energy crisis. According to the PM, the government is rationalizing energy in order to save natural gas, to redirect it for exporting and increase Egypt's sources of foreign currency during the global energy crisis. The plan, which takes effect from tomorrow, Thursday, includes reducing lighting on roads, regulating the use of air conditioners in government buildings amid ongoing global energy prices. But Egypt has an electricity surplus of more than 25%, while most power in Egypt is generated by gas. The country plans to increase the supply of electricity generated from renewable sources. And, well, I think that's the much we can take on the program today. Thank you so much for being a part of it. We do have more stories for you, but we'll keep it for tomorrow. And we will join you again on Business Incorporated. I'm Ini John Mekwa. Enjoy the rest of your day.